Good afternoon, traders. Jeff Friedman, Jim Barrett, here with a special report on March 7th, and we're going to be talking about in the special report, or a discussion, if you will, on non-farm payroll, the employment situation. Big report tomorrow. It's a monthly report. It's the granddaddy, in my opinion, of economic reports in the United States and how it will affect the marketplace. Uh, Before that, we did have the ECB that came out today, did not change rates. We had the Bank of England that came out that did not change rates. The market is really kind of not moving around a lot, kind of small range today in comparison to the week. When talking about stock index futures, I think that everybody's waiting for this big report. My take on it is we're looking for about 170 to 180,000. That would be slightly more than last month. I'm kind of on the take that basically, Jim, good news is good and bad news is good. I'll explain that. If we get expectations, the market's been rallying. Obviously, everybody realizes that the Dow Jones futures as well as the cash market has made all-time highs. The S&P is in grabbing range of making or testing the old all-time high. I think we're within 20, 25 points in the S&P, in the cash market as well as futures. So, have said all that, I think that good news would make the trend's your friend, keep going higher. You know, if we get 190, 230, 250 in job creation, okay? If the unemployment rate, 7.9, and that's what they're looking for, that's what it was last month, comes out 8.1, which would be a negative, I don't think it's going to shatter the markets in general. Bad news is still good. And why? Because I am a firm believer, it's my opinion, that the market is going up on QE3 or QE4 or the Federal Reserve and the Bernanke show helping the marketplace more than anything else at the moment. So, have said that, that's kind of where I'm at. I think that you basically, looking at on a percentage basis, looking at the stock index futures, just to give you an idea, we're hovering around 8%. So if we get a great bullish report,
8%. Okay.
higher on the year, okay, in first 2 months. So if you keep that rate going, we would be, 60, 70% for the year if we could keep that rate going, which we cannot, in my opinion. I'm thinking fade, if you wanted to be an aggressive trader using this report, a very bullish report, I would try to sell a meaningful rally in the stock index futures. Looking at the S&P, I would try to use the old high as maybe a resistance area with a tight stop. That would be kind of where I wanted to go. If it's a very bearish report, obviously I'd want to buy breaks because the trend's your friend and it would be keep going. This would be a trader's attitude towards the marketplace. Position traders, obviously, you're probably, would like to go with the trend, and that would be a more conservative basis. Obviously, looking at S&Ps, Dow Jones, NASDAQ, we're all in, on a technical point of view, an uptrend. I don't think that any evidence will come out tomorrow to change any long-term trend in the last 2 months. That's my opinion solely, but please give us a call. Jim, what do you think?
I agree. Tomorrow's number is unlikely to change what's going on. Today actually was kind of a big day in the notes and bonds. It's fourth down day. The yields were up quite a bit. The bonds were down pretty hard. Playing catch up to stock indexes, which have been up strongly. Bonds are sort of a miscue a little over a week ago on the Italian election results. Pushed the bonds higher after a stagnant period of 2-3 weeks trading sideways. And yields broke a little bit more than the bears would have expected. And we hung up there a few days, possibly because Yellen in a speech a couple days ago reiterated they're going to keep, that is, the Federal Reserve is going to keep buying $85 billion worth of bonds. Anyways, the economic picture brightening a little bit, a couple anecdotal things, ADP number better than expected. Today's jobless claims lower than expected, which is obviously better than expected economic news. In fact, I believe the 4-week claims, the average fell to a 5-year low. So labor situation looks better, and with the stocks near all-time highs, as you mentioned, people look around and look at these yields, and what are we doing? Pushing 186 in the 10-year and under 3% in the 30-year. So we've got a bit of an adjustment going on here. The notes down hard, yields up to 1.98. The bonds down pretty hard. I'd expect with a good number tomorrow, we could get another push lower. However, the Fed is there in the end to buy these things. What we're doing is shifting the trading range down a little bit rather than a situation where they go into a free fall. That is the notes and bonds.
All right, that's pretty good, and I like that. I kind of agree with that. Remember always, trading futures or option to futures involves risk of loss and is not suitable for everyone. You can follow us on Facebook or Twitter. I hope that you'll call one of us and we can discuss any of your trading needs at any time possible. RJO Futures is looking for you as a client. Thank you.